Good afternoon, everybody. Welcome back to cilinixfxcapital and welcome to a new video here. It's evening, actually, by the way. But welcome to a new video. We're going to do a full video on the markets right now. It's very much necessary with all these, with everything that's going on. My hair is a little bit messy, but that's hopefully okay. So we'll talk about the fundamentals. I mean, the fundamentals at this point of time are still very much driving what happens in the markets. So we'll start off with that, and then we'll really focus on the news and what that means for equities, but also what that means for Bitcoin. Then we'll do a brief update on XRP and Ethereum. Those have moved according to expectation, right? So if you watch my videos regarding the crypto markets, in which I also always cover Ethereum and XRP and a little bit more in specific, the moves that we had overnight, which were both bearish moves, of course, because the entire market has moved downwards, were expected. Ethereum has hit a significant level of 2,800. If I hadn't bought a lot of Bitcoin, which I have, maybe I would have bought Ethereum there. But I think Ethereum at this point of time inherently is much, much riskier to buy than Bitcoin. So it's a little bit risky. And XRP also dropped down into $2, which is also an interesting level if you want to buy for long-term accumulation. I expect bounces on both, but that does depend a little bit on the fundamentals. I mean, what I've always said for Bitcoin as well is that I expect the level around 90,000 to be the local bottom. And for XRP, that would be around $2. For Ethereum, there was briefly a moment where I thought, 3,100 might be able to serve as that level. But 2,800, we still had a massive fair value gap. So we still had some gaps there that we needed to fill. But that 90,000 would be the bottom. And that if the fundamentals were bad, which they are bad, and they even worsened over the last 24 hours, but we'll get to that in a moment, then we could still spike down into 87, 85,000. And that's what's happening right now. If we do not get a strong reaction at 85, 87,000, and if we're unable to reclaim 90,000 at some point of time next week, then I was wrong, okay? Because I said this the entire week, right? And the entire week we dropped down lower into that level, and I was correct, right? Because, I mean, I started saying it when we dropped down to 97 and 96,000. I said, no, we're going to drop down lower. Then we're going to bottom out. It actually looked like 90,000 was going to be some sort of a bottom. As you can see, we got some nice bottoming price action. But then we got the bad news. And the bad news is what I'll tell you right now. Now, first of all, the liquidity situation in the United States is not the problem. We haven't had repo operations for a couple of days, so that is very good. And the SOFR spread, which basically means, the interest that banks and institutions that need liquidity, that need cash, need to pay on their short-term positions, that also decreased. So that's all good news. But then if you take a look at the general equities and the volatility index, you can see the volatility index had a massive move to the upside, which means that there's a lot of uncertainty in the markets. And at this point of time, it is still elevated. It's trading at the highest levels where it has been since the 17th of October. So generally bad news, right? And then you're going to ask me, okay, well, what is the bad news? I mean, Thursday, we actually dropped down quite a bit. We had NVIDIA earnings coming in yesterday, and that was all good, right? And that is still good, by the way. Yeah, I do want you to realize that the NVIDIA earnings coming in higher than expected, I think that greatly reduces or decreases the AI bubble risk that is present, right? So that is definitely good news, but honestly, there's a couple of things right now fundamentally that are not amazing. First of all, there's a lot of uncertainty regarding the Federal Reserve interest rate for December. My apologies, I have a little bit of an itchy nose. So this is quite uncertain. And at this point of time, the probabilities of whether we are going to get a rate cut or not in December are tilting towards the wrong direction, right? I mean, it's tilting towards that we are not going to get a rate cut. We've had a lot of Federal Reserve board member speeches in the last couple of days, and those have also been, a little bit hawkish, right? And hawkish basically means that they are going to keep the interest rates high, that the Federal Reserve is going to take an aggressive stance against inflation. And honestly, I mean, if we look at the data, I also think that is more likely, and that's the best thing to do. The inflation rate is still quite elevated, regardless of what you expect it to do in the future. And then outside of that, there's two more things that are causing this volatility or this fear in the markets. First of all, there's a little bit of drama between the Democrats and Trump, and he said some things on Truth Social that could instill some fear in the markets. So that is one of the things. The second thing, though, as most of you knew, it was that we were going to get economic data today. And the economic data that we had today is basically the worst we could have gotten. First of all, the unemployment rate we had in September was higher than expected. If the unemployment rate is higher than expected, that is one of the things that creates most fear in the markets. If some of you remember back in August 2024, unemployment rate was higher than expected. We also had the interest rates in Japan going up, which is quite bearish. Some of you might know about that. And that caused a massive spike to the downside as well. So that was higher than expected. But then you have non-farm payrolls and all of this data, all of these initial jobless claims and continuing jobless claims data, lower than expected, right? So in September, you had higher than expected unemployment rates. And then the initial jobless claims and the continuing jobless claims, you want those to be higher than expected. Then we're maybe going to get a rate cut. But no, those were lower than expected. So that makes the probability to get a rate cut lower. And then the unemployment rate was higher than expected, which in general is just not great. So that's the last thing, which I think really caused this volatility index. I mean, basically every time that the unemployment rate is higher than expected, that happens, right? So that created that, and that's why the market is pushing down. Now, honestly, I think it's an overreaction again. I mean, so I still believe in what I said before on Bitcoin. I still believe that, yes, I mean, if we got some bad news, we could spike down lower, which is what we are doing right now. And I still think we can spike down a bit lower into 86, 85,000. There's the last support. But unless we get some sort of a world war, let me knock on wood real quick, I do still think that that's going to hold up as a local bottom. And I do still think, although that is something I'm a little bit more careful about, I do still think that we'll be able to hold 90,000 as some sort of support, right? That we bottom out right here, hold 90,000, get up to like 100,000 right there. But that second part, that's just very risky. And we really need to see some improvement in the fundamentals before that becomes real. And then, like I said, if we look at Ethereum, it's at a massive support level. I expect the same, push down a little bit lower. Like there's still a level right here for Ethereum at 2,680, which we can spike down into. And for XRP, that would be a little bit lower, I would argue. No, for XRP, the main support level would be right here at 1.96. Now, last but not least, altcoins. Are there some altcoins that are interesting? Yes. Is there anything that I would say, okay, that's where you need to invest in right now? No. I mean, there's quite a lot of exit pumps in my thoughts. Like Tensor has done a like 3 or 4x or something. Amazing. And if you can catch it quickly, like if you see that there's momentum and if you see that there's a lot of volume behind the momentum, then be my guest and long it. But I'd say the risk reward at this point of time is not amazing. Oster, I spoke about this briefly yesterday. I said, okay, if we drop down into 1.1, might be interesting. I still think that. Uniswap, if Uniswap drops down into that level at 6.3 and 6.2, I still think that is quite interesting. And Grass has a lot of momentum, but ultimately is not my favorite project. And then last one that I do want to cover is Numeraire. NMR, those have pushed a lot of great updates. If NMR is going to be able to hold $11.5 and $12 as support, I think this can rally up higher into like 15. This is a great project, and it's had some massive funding in the last couple of months, and just in general, it's actually a project that you can get excited about. So definitely check that out. But that's it for now. Thank you for watching, everybody. I'll see you all in my next videos, and bye.